Hey, welcome back to the channel, everyone. I'm Doug, the retirement guy with the monthly ETFs. You ever wonder how to invest in AI without buying all the different companies? We have Rex Shares AI Equity Premium Income ETF. We're going to do the review on to see if this will fit into your portfolio. How does it work? What makes the engine run? And see if it's worthwhile investing into. But before we get into that, we got to be a big shout out to all of our subscribers. You guys are awesome. And if you're not a member, don't be afraid. Hit that subscribe button, hit that bell notification notice so that you always know that when we're putting this out, because all we do is try to put out videos to help grow your pocketbook. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. So if you need any financial help, always contact a financial advisor. So who is AIPI? Well, it's Rex Shares AI Equity Premium Income ETF. Now, Rex Shares is a big ETF organization. And what they have done, they're an exchange traded fund that mostly invests in stocks based on a particular theme. Like this one here is actively managed and investing into artificial intelligence companies selected from the holdings of the BITA AI Leaders Selected Index. Now, I know that sounds like a lot of legal mumbo jumbo, but basically what they're seeking is they're looking for anybody and everybody who is involved in AI, not just, the old fashioned, if you probably heard on TV, NVIDIA. They're not just doing one, they're looking at the whole industry and saying who's a part of it. The fund seeks to generate income by writing covered calls on its holdings. So different from a lot of different ETFs, these guys are actually buying the shares, they're holding the shares, and they're doing covered calls on those shares, aiming for capital growth and income while maintaining the flexibility to adapt based on the market conditions, which are typically paid monthly. So what they're saying is they can move when things in AI change to a different platform. If it's a different area, they can move as the market changes. And they always will try to pay this out on a monthly basis. The fund started in June 4th of 2024, so we're about a year into this, and this is why we wanted to do a review to give you guys the insight to it. So how does the fund work? AIPI invests in a portfolio of AI-focused companies. Think of this as really as like the semiconductors, the cloud-based software, data analysts. As I said, this is not just buying NVIDIA and saying I'm in AI. These guys do it across the board. Who's going to be the big chip collector? Who's going to be the cloud holding the information? What software are we going to be using? And then all the data analytics that need to come on top of it. On top of that, they use derivatives like call options to generate extra income. The premium income is paid out monthly, making it appealing and for income-focused investors and don't want to wait for that quarterly or yearly cash flow. When we take a look at the holdings, and exactly what we would expect, this is a high-tech hold. So this is my first point. If this fits your portfolio, you are basically buying this fund. You are getting 83% of the fund is technology. So how does this fit with your other portfolios and your other ETFs and that you have in your portfolio? Are they heavy technology? Or are you trying to put your eggs into this basket to get the technology? It's just one thing that we always want to put a warning out. This one won't fit everyone's portfolio because of the heavy side of technology. Now, I'm not saying that they're buying bad companies. Look at this. Across the board, these are all major names that you see every day on the news reports about what's going on. Google, Alphabet, Apple. You got to hear the CrowdStrike. You got to hear about NVIDIA, Peloton, micro technology. It's just so many of them that are commonplace names that are all in one fund, but they are all tech. So we take a look at the performance of this, and I call AIPI is in a correctional course and growing. Now, what do I mean by that? When the April tariffs kicked in, this thing took a hit, like many stocks did. And it recovered, but hasn't recovered back to the numbers that it was. It's on a growth factor. It's grown over the past basically 3 months. And now all of a sudden we're seeing September, it's starting to gain even more shares because it's up to 1 month up to 3.2% growth. In 6 months, it's 0.12. So in 6 months, it's kind of, like I said, recovered. And then for year to date, it's down 12.85, and 1 year down 14.96. So I believe right now is a great time to be investing into the fund because it's at a lower rate, but it's also showing that it's on a growth pattern. When we take a look at the dividends, very, very smooth, very, very comfortable dividend pattern. Now, I understand that the drop off that we've seen through that March, April, May drop off, and then coming back. It almost patterns exactly what it was doing before. So as AI, as we know, is the future out there, but they're afraid of AI because of the dot-com booms and the busts, and they don't want to jump crazy into just blowing out everything about AI that is the next greatest thing, and then we turn around and say it pizzled out. So what we're basically seeing here, these guys can generate some great income when there's the volatility in the marketplace. Without volatility, they have a very steady base that they can do, and you can see that's what they've been at this entire year so far. Other than that one little drop off in May and in April because of tariffs, you look at everything else has been holding in there about that $1.23, $1.24 range. So the yield on this thing is 37.38%. And the average is $1.27, so right on board. So $1.27 each and every month. So it's a very, very strong cash payer at a 37.38%. Now we put this into the rest of give you a total return, and that is the dividend yield of 37.38 less the growth fund of negative 12.85. It gives you a 24.53% growth in a market that could easily rocket and take off in the AI or technology basis. So some very strong numbers there. Plus, when you add in that $1.27 for the average dividend payment, you get some steady cash flow that you can really work with. Now, how does the tax considerations work? Well, Rex Shares does use the return of capital. And if you're not familiar with what return of capital is, we do have a video out there that we have produced to explain this very thoroughly. So today I'm just going to give you the real quick highlights. What basically return of capital means is that it lowers the immediate tax bill. Distributions that are returned as of return of capital are not taxed in the same year that they're received, unlike ordinary dividends and interest. They instead reduce your cost of the basis of the ETF shares. So I always use this example. If you had a shares that you bought and put $100 into, and it pays a $10 dividend at the end of the year, what this program does, it says you have $100 on paper, you now have $90. You have $90 in cost because you got $10 back. The potential deferred taxes, because ROC isn't taxed immediately, you can defer your tax liability until you sell your shares or until the ROC distributions exceed your cost. Just like my example, you're not paying any taxes on that until you get down to the bottom of the paper till your funds are down to a zero. And then after that, if it comes to a zero and you're still collecting dividends, then you're going to pay capital gains on those dividends, but they're going to be capitalized at long-term holdings. But once you sell, your adjusted lower base may lead to a larger capital gain or a smaller loss, depending on the sale price. Now, the biggest thing I'll put here is a giant asterisk and say, guys, if you want to know more about this, don't always just watch YouTube. Get out there and ask a professional, ask a tax professional. I personally, to be honest with you, I have a CPA that I can pick up the phone and call immediately and get all the information that I need when I need it for my taxes. So I would highly always recommend make sure you have a tax professional that you can talk to. The forecast. Well, let's see what the experts are all saying about AIPI in the long term. Well, in the next 3 months, they have a modest upside between a 5 to 10% up on this fund, or sideways movement with high volatility. Now, why does that make a difference? Well, if you have high volatility, it means you're probably going to end up selling some of your covered calls, you're going to sell some of your shares, and you're not going to have the growth that you want. But if we don't have the high volatility, you're going to see the fund grow across the board, but you're going to see your dividends lower. So the price could move upward if the option markets are favorable, implying high volatility. And the AI sector resumes strong growth. So technology indicators show that it's a bullish signals which support short-term gains. So in the next 3 months, guys, what this is telling you is it's a buy signal. It's a 100% buy signal. You're going to have a positive upside with maintaining your dividends, or you're going to get a high volatility, which is going to control your sideways, which is not really going to drop much. You're going to stay right at about the same price, but your dividends are going to increase dramatically. So to me, it kind of sounds like a win-win situation. By the end of 25, the potential of more moderate growth, possibly reaching a price target of $45 to $55 range. So that's a very optimistic assumption. Some analysts already see the average price targets in that range. So basically what they're saying is that this thing can already produce the $45 to $55 by the end of the year. So you're showing that you're going to have some nice growth all the way out. So we have a good, about 3 to 4 months of solid run right now on this program. Now, return on investment. As I've told you guys before, I am a person who does things on a return on investment. How quickly can I get my money back out of a fund, out of a share? And on monthlies, I am always trying to find something that's in 24 months or shorter. So AIPI, the return on investment with the new dividend of $1.23, puts that average at $1.27. To calculate this out, you take the share price of $43.18 divided by 127. That gives you about 34 months. So I'm not going to say I rule this out because of the positive of the forecast, the strong dividend, and all of that. And so this thing tells me that the price is actually going to be increasing from the forecasting. It's probably going to be increasing. So I'm going to have a chance to get more money back out of it. Now I know I'd have to sell some of the funds to get that increase, but it's going to change our 34 months. But this is based on just on the dividend. So right now I'm very pleased with at 34 months. I always try to stay under 24 and let it fly. Anything over that, we got to do some heavy research. That's why we do the forecasting. So the summary of AIPI, in our eyes, this is a buy. We believe that this is a solid buy. Is great if you don't have a lot of technology in your portfolio already, or if you want to be in the AI section. I would put this in a separate category, knowing that you're heavy into technology. The assets under management of $356 million, that definitely says they have plenty of money to do what they want to do. And if they sell some funds, they have money to buy them back. They have a lot of money to invest so they can continue that dividend payouts. The return on investment at 34 months, as I said before, I always like to be under 24 months, but 34 is fitting it in. Basically, I look at that, 2 3/4 years. I'll roll it to 3 years total. But I think there's a lot of growth coming off of this. The share price, I think we're in a great position right now. It's up 3.20 in the last month, down 0.12, which is basically recovering itself from the April turnaround. And now we take a look at income. We have a solid income at that $1.27 average. Even with that $1.23 in this last month, it still is a strong average right there at 127. And the forecast looks great. I mean, you have it until the end of 2025. Very, very strong numbers across the board by the professionals. So what are your thoughts? Should we buy, sell, or hold? Guys, I'm Doug, the Retirement Guy with the monthly ETFs. If you like what we're doing, hit that like button. If you're not a member, now you can see why you want to subscribe. We help you find the gold in the paperwork. Also, if you have any questions, comments, leave them down below. Also, if you guys can support the channel, we do have a Patreon support package for the Doug, the Retirement Guy. And we'll leave that in the description as well. Hey guys, we'll catch you on the next one.